Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of Linn & Associates with your weekly financial update for this Friday, the 17th of March, 2017. You know, about an hour ago, I was on TV with Liz Klayman from Fox Business, and I was Epstein on this Irish day, if you will, St. Pat's Day. And she was giving the statistics of the market having closed higher in the S&P over a number of years on St. Pat's Day. It didn't work today. One of the things I've been saying, and I mentioned it again today, is we've run out of gas temporarily in the market. It's had its surges and it's suddenly going sideways, and you see that on the daily charts, not quite as much on the weekly, but let's get to the weekly so you can see what's going on. I don't think you can call on a monthly chart that the market's run out of gas. If you take a look, you've gone from 1802.50 to 2401, and each bar, if you will, represents a month. So that's pretty much straight up pattern. When we come to a weekly chart, you see a bit more of it in terms of this sideways action. You had gotten up here at the beginning of March to your highs. Yeah, I realize we had a great rally the other day after the Fed Open Market Committee came out and said 3 rate hikes, and then Miss Yellen, the chairwoman, dovetailed it, gave it a dovish feel, and the market rallied off of that. And you see that this week, but we haven't gone up for new highs, which is important. Is the trend up? It absolutely is. You've got higher lows, higher highs. What a swing line does, for those of you that may not have seen me before, is this is an indicator that I wrote that we put in our charting software that you can use. And it works, be it on an ETF, the stock market, whatever. And the idea is you look at each bar, and is the next week a higher week, a lower week, an inside week, an outside week, and you're able to draw in a certain way each time this line, and it's not up to you. The indicator does it. And what you're looking for if the market's trending is in an uptrend, higher lows, higher highs. Well, you've got that, higher lows, higher highs. So until that pattern is broken, you're in that trend. To break it, you got to take 2354 out, so you have an idea of what number should not be violated. The second thing I plot on charts are the 18-week moving average of closes and the 100. Traders like to have points that they can refer back to. And admittedly, moving averages are a lagging indicator. They're not forward, they're backward. But to get back to this support level, you have to break this uptrend. So it just gives you an idea as to where that is. And another thing that it does, it can validate if the swing line is up and the market's trading over that number. Well, it's until you get away from that, because the bias is up, you're looking to go with ideas off of a trend being up. What about potential resistance points? One set could be, and I use them a lot, are Bollinger Bands. Bollinger Bands are an algorithm designed to keep the market what? Trading within them 95% of the time. So as a professional chartist, broker, I look and I tell my clientele that when the market hits a Bollinger Band, that's where I think the pros are stepping out of the market. There are ways to get back in, but that is where I think they're stepping on. If you take a look on the weekly chart, pretty interesting. What about the downside? Same thing. So it's one way that I teach to look at a market, and that's what I like to do. I like to be a teacher, a broker, and all that. I then look at momentum on each chart. I use a study called slow stochastics, and yes, you can use MACD, you can use a bunch of things, and I'm going to create for you ultimately libraries, video libraries, so you can go in and see how at least the basics are used in them. So we'll talk about that as the year goes by, because I'm just starting that. But in looking at all this, higher lows, higher highs, got up to the upper Bollinger Band, and momentum locked in bullish. What would break this? Getting under 2354. In the Dow, the trend is up, momentum is locked in, the bias is up because you're over the 18-week moving average of closes. You got higher lows, higher highs. If you were to take out 20,781, I would contend that that trend is broken and that the odds would then favor price could make a run back to that 18-week moving average for support. The poster child of the bullishness has been the NASDAQ. It has had a pattern of higher lows, higher highs all the way through, embedded reading. Embedded means you've taken a market into an overbought area, then you've kept it there so long that it just locks itself in. It's no longer overbought. It's just locked into an uptrend. And pullbacks in the market are what? Buying opportunities. But if you break a swing line, and this number would be 53, 33, 75, I contend you would have broken that pattern to be a big chink in the armor. Now, the nasty child of the whole group, because they are children as I call them, has been the Russell. And the Russell has a pattern of a higher high, then came down, made a lower low, just came up. It's having an outside week up. This line you could draw from here, or you could have a down arrow. You can go either way with it. But what the market has done is it came back and held the 18-week moving average, but unlike the other markets, it's just overbought. This is where the pattern was broken, and I'll show you. Here you have a market with higher lows, higher highs. Here the market stalls, and this is the week of Jan 6th. Here you take out that low. You've now got a pattern of lower highs, lower lows. Ultimately, if the stochastic drops back under 80, you're looking for the 18-day average. You hit it, and you hit it actually this week. How's that? And you're sort of sitting there right now. Interesting, isn't it? Support back at 1320, resistance now 1387. In the VIX, you're just hanging. Look at how long this has gone sideways. So when I was on Fox today, I said something that I thought is very important. It probably got weighed away because we have such few moments to really say anything there, because there's three of us and you get your moment of sunshine or your moment in the rain and whatever you want to call it. Break out to the top side of this, I think the stock market is doing what? Going down. Break out to the bottom, close under the 10 level, I think you get a whole nother surge to the upside. And while you're just doing this, you get chopped around, but it's hard to give up your long positions because they're still working. 10-year note. Well, you got a higher high, a lower low. You came down and you're back up at the 18-week moving average of closes, and momentum has gone flat. There's nothing there. Dollar index fell back. Now, it hasn't quite gotten to the to the lower Bollinger Band. It's about 30 points away with the lows, but you don't have a trend. You got a higher high, a lower low, stuck sort of against that 18-week average. And while the press keeps telling you the dollar's so strong, you do realize you were in the 103 area earlier this year, and you now just got under 100. So if you call that strong, I don't. What's been strong is the euro. The euro has gotten back to the upper Bollinger Band. It does have a pattern of higher lows and higher highs. It's been in an uptrend, but you're knocking on the door of where the real resistance is, which is the upper Bollinger Band. And if you were to scoot past it, 110 is a big number, but 110 would get the whole world talking that the euro has suddenly come back into its own. I don't know if that's the case, but momentum is certainly pointing up, and until you take out 104.98, the bulls are controlling the day. British pound, even with this week's rally, this is a bear chart on the longer term. Lower highs, lower lows. All you're doing is rallying back to the 18-week moving average of closes. Momentum's flat. I contend the pros are probably selling it here with stops over 125.74 and looking again, can they drive it back down to 121.50? In the Canadian dollar, the longer-term charts are bearish. Lower highs, lower lows. You have rallied back up to the 18-week moving average of closes, but that's all that you can say. This is the resistance point. If it's going to reverse down, watch out. You could be going back to the lower Bollinger Band. Japanese yen, no trend. lower highs, lower lows, but you're over the 18 and 100-week moving averages. Everything negates itself out, momentum pointing up, and two numbers are rushing in. Your resistance point of the upper Bollinger Band's falling rather dramatically and the bottom's coming up. They're going to wrap their arms because of all this sideways action in the market. Crude oil. The crude oil market's got the higher high, the lower low. A lot of support here between 46.53 and 46.34, and a heck of a lot of resistance now at 51.73. Momentum down, not oversold yet, but basically you're dealing in a sideways market more than you are anything else. Nat gas, nice rally, still oversold market, could get back up to the 319 level because you got lower highs, lower lows. It held the 100-week moving average of closes, and you've had a heck of a bounce. Is this market putting in, is the big question, a seasonal bottom as we head into the summer, and that's going to be what we all look at. So as you can see, we finished up on a weak note. Now I want to talk to you. If you're watching me, it's because you like what we're doing. What if I tell you I can teach you how to do this in just a couple of weeks? Yeah, you'll be able to look at a stock chart, an ETF chart, a futures chart. In fact, how I teach you is you're going to close the name up on the chart. You're not going to even know what you're doing at first. You'll know because you're not going to be able to get away from it. But if you do it the way I teach, you take everything off the chart and you look at just the patterns. And then I'm going to teach you how to apply swing lines. You're going to learn those. I'm then going to walk you into moving averages, chapter upon chapter by video. So you come on. Each video is maybe 8 minutes long. There's 54 of them. You get the charting course that includes charting software if you haven't used our software before. And if most of you haven't, so that comes right with it, $100 value. The second thing, my twice daily updates, my morning webinars where I review with you, and I'll get to that in a moment. These are all the chapters, and you start off, and I always start off with PowerPoints to teach you concept. Once we get to the concept, we open up a real chart. You'll open the same thing that I did because the recording will go back and you can call up those exact days on your chart. You're going to plot the way I do. You're going to learn eventually window envelopes, and the numbers will look like this, and I'll teach you what they are. You're going to learn buy, signal, sell, but I don't want you to take the actual ones while you're learning. I want you to see what's going on. So you're going to see a charting course where in the mornings I hold a webinar. And it's not live, but I review Monday through Friday, 40 charts at a time, teaching you the swing line, teaching you the moving average and everything there. Now, I've seen courses, and they're out there, $1,600, $1,500, $1,000. You don't have to have courses that expensive. I used to charge $179.95 for mine, then shipping and handling because we had to mail it out. I rebuilt the whole course this year, a complete different way. No shipping, no handling, all online. You get the charting software, assuming you haven't used it. You get my daily updates. And those two by themselves are $160 value. The whole course, $89.95. It includes all that. And then, for right now, I'm throwing in a discount. If you type in IRA 15, when you go to buy the course, it's $74.95. Limited time, I promise you that. And then I raise the course price again. So if you think you're going to wait, take advantage of that, nah, the price is going to go up probably back to the $179.95. So take advantage if you want to learn this technique. Click up here if you're watching me on YouTube. When you do, you're going to go right to the page that tells you about the course, and you can buy it there. Remember to type in IRA 15. If you're looking at us on the bottom right here, you'll see the scroll. Go to www.iraepstein.com, go to the word education. You'll see the facts, how to purchase the course. Everything's right there. Video to explain everything as to how I teach. That's the best way to go about it. Or you can call us, 866-973-2077. We can explain everything on the phone, take your credit card, and away you go. So I'm Ira Epstein. Best investment you're going to make is you. Take advantage of it. Learn something. Take care now.